Hi, family and friends. It's TRUEsday Tuesday. Today, I want to come and tell to you guys the truth about college planning. This is just one of the carriers that we use whenever it comes to preparing a proper college planning fund for you via life insurance. A lot of people don't know that this is even possible. So I wanted to really break down, and today I'm going to highlight this carrier. It's Foresters Financial. And the reason for this is college is costly, and it's best if you're able to start planning it for it today. And this, like I said, this is only one of the plans, one of the ways that we use with the college funding specialist to help you out on your journey. So this is the college planning situation. What makes up the total cost of college? This is something you want to look into as far as knowing what your fees are and what your responsibility is as far as college planning. So this is going to be your tuition, your fees, your housing, your meals, books and supplies, transportation, travel, entertainment, and technology. You want to make sure that when you're planning and you're putting everything in place, that you take a look at all these areas. College tuition cost is continuing to increase every year. So from 2010 to 2021, the average cost of tuition, fees, room, and board has increased as follows. So with the private 4-year, colleges went up 17%, and also with the public 4-year, it has also went up 15%. The average undergraduate cost for 2020 through 2021. So for the public 4-year in-state campus is $26,820. For a public 4-year out-of-state on campus, you're going to be looking more towards the 43,280. And then for the private nonprofit 4-year on campus, for 2021, the undergraduates, their cost of college was $54,880. So it is broken down. When you look in the blue, that's going to be your tuition and fees, and then also your room and board in the light blue, and then yellow would be like the books and supplies, and then with the purple, that's showing other expenses. So that's a lot of times people don't take that into consideration, and that's exactly what makes the costs go up even more. So is college degree still even beneficial? And a lot of people looking at the inflation prices and saying, man, is this even still worth it? Employees with a higher level of education typically does earn more and have a lower unemployment rate. So if you just take a look at the different educational attainment, so the doctoral degree, you have the professional degree, master's degree, bachelor's degree, associate degree, and high school diploma. As you look, you can see with just a high school diploma, the unemployment rate is 9%. And as you go up in school and with your degrees, that unemployment rate is lower. And it's vice versa as far as with the earnings. So with a high school diploma, showing that you're going to be earning less weekly, and as you go up, is your weekly earnings are going to raise. So that's something you want to take into consideration when you're just really looking to see, is this even worth it, right? So how are families paying for college? 45% of parents use their income and savings. So 45% of this debt is going to be on you, your responsibility. That's just what happens. 25% will, you can say maybe they're going to take care of the grants and scholarships. 20% of that money is going to be borrowed money. 8% comes from the student's income and savings, and 2% from relatives and friends. Are you in a financial position to help? So your child may need assistance. So this is when the FAFSA comes in hand. And this is when they're going to take a look at what your financial situation is to determine how much you're going to actually be responsible for to help take care of your child's college education. And you see financially is saying that we are going to be responsible. I say we because I still have children that I'm raising and looking forward to putting them through college. but we're going to cover about 45% of their college education. So when you start to think about a plan, this is what you want to think about, how much you want to have put aside for your child's college education. This is one of the college planning strategies with life insurance. So how can life insurance complement your college planning strategy? Life insurance, one, it can provide the boost that these other plans need due to the plan limitations, restriction on fund usage. So whenever you're looking into other plans like the Coverdale or the 529 plans, those plans have plan limitations and they restricts the fund usage. So with the life insurance, you can go around that and you can use this strategy to implement. So it's going to have the tax benefits and an abrupt end to the funding due to the loss of income from unexpected death. So say you have everything going, you're putting money into your 529 plan and something happens to you. Then what? That we still have our children here, and it's going to be a burden as far as just even losing us. So then you just start to think about their college education. What can they do then? With life insurance, this is something that's going to definitely help implement what you have going on now, especially in that area. But the key to it is that you're going to want to diversify with life insurance. And so with the college planning with life insurance, it's going to provide income tax free death benefit, potential for tax deferred cash value, and generally income tax advantages with the distributions. So with this one product, you're going to be able to hit all of those areas as far as maintaining and building up this plan for your child. And this is something that you can start even before birth. These are the key advantages of life insurance that it offers in comparison. So I said the income tax-free death benefit, you're able to achieve that with the 529, with the life insurance, but not with the 529 plan. And then you're going to have the tax deferred growth. You can take a look at the 529 plan and the Coverdale. They do also have the tax deferred growth, but then the tax advantage distributions. All three, you're able to accomplish that, including life insurance, right? But as far as avoiding probate, so the funds that are in a 529 plan or a Coverdale educational savings account, whatever that funds is, they may have to go through the court. If something was to happen to you, they may have to go through the court before they even being released. And then with the funds used for reasons other than qualifying educational expenses. Basically what I'm saying is, if your child decides to go to a trade school or decides to go on a route entrepreneurship with a 529 plan, a Coverdale educational savings account, those are not gonna be qualified educational expenses. So you wouldn't be able to use your funds for that without receiving some type of penalty, a withdrawal fee. But if you look at investments and personal savings, of course, you can use those for however you want. But typically not included eligibility for requirements for financial aid. Let me say that in a simpler way. So with life insurance, you're not going to have to, typically, they do not use this against you when it comes to deciding how much your child is going to be eligible for their financial aids when they fill out their FAFSA. So how does this strategy work? So with this particular plan with Foresters, when you purchase a Forester Smart UL or Advantage Plus 2 whole life plan, you keep control of the life insurance coverage and its cash value. So you're going to be in control of that. And then upon your death or unexpected death, the death benefit may provide the funds to help cover your child's college education expenses also. And this is not even talking about the cash value that's growing in it. So that's where we get to the alternatively. When it's time for college, you can access the cash value that's been growing within the policy. So that cash value growth may be more secure for you versus investments that are subject to direct market fluctuation risk. So you don't have to worry about this fund not being there because the market, dropped or something. But the cash value typically does not affect, like I was saying, the financial aid eligibility, so you don't have to worry about that. Plus, after college is paid for, the insurance may be used for other financial needs, such as a supplement for retirement. So you are able to use that as well and for your children. So this is just a case study with Carlos and Lacey. So Carlos is 37 years old and Lacey's 35, and they're married and both in good health and have a 2-year-old son. So their primary need was to protect their son in case something happened to them. But they're also wanted to make sure that once he got of age to go to college and those expenses, they did not have to worry about that. So, and also they wanted to make sure their retirement income was secure. So what they done was they purchased the Advantage Plus 2 whole life insurance, and with any declared dividends being applied towards their paid up addition. So basically they're paying into their policy, and it's going to create a paid up addition, and that's going to be the money that they're going to use to fund and to grow. So Lacey purchased the Smart UL certificate with the level death benefit option. They both decided to pay $300 per month into their certificate to fund their plan, is to make sure that their child in the retirement is going to be set. So this you can see right here how it ends up working out for them. So the coverage assumes the preferred is a non-tobacco. And so they're basically solved for the maximum amount of flexible paid up additional rider that can be purchased as a non-guaranteed assumption. So their initial face amount for the policy was $100,970 with a premium of the $300 per month. All right. So Carlos may be in a position at the start of college just because of the paid up additions. And then mind you, this does have the life insurance protection as well. So if something was to happen, it'll be in there. Anyway, so Carlos, by the time their child is ready to go to college, so he's going to be in a position to take up to $19,000 a year for 4 years to cover college costs. And then the distributions are based on surrendering paid up additions until the cost basis is reached, then switching to loans. So they're able to do that. And then at the age of 65, he's going to have potentially distributed $76,780 to cover college. So at the age of 65, the death benefit may be $137,695, assuming Carlos distributed the amount shown. So this is how it'll end up for them. Now with Lacey doing the Smart UL, going that route, the initial face amount is $267,489. So she's going to be in a position to take up to $17,796 a year for up to 4 years. So this is every year withdrawing this amount of money for their child's college education, which will not affect their FAFSA at all. Okay, so this is what I want you guys to look at, pay attention to, and think about when you are saving for college for your child. There's so many different options and so many different routes that you can take with life insurance. A lot of people think that this life insurance is only for when you die. No, it's so much more. And that's why I'm here telling you guys. So Lacey, about time she gets to the age of 65, her death benefit may be shown for $174,466. And all this is just really starting from planning and putting that fund together so you take care of your child's college education and your retirement all at once, not having to worry. These are some of the different kind of life insurance well, basically benefits that foresters have as well. So foresters is a fraternal benefit society. So a member-based life insurance provider for everyday families. And foresters is driven to enrich the well-being of families and their communities. Just imagine choosing a life insurer that makes a positive difference in the world. And that's something that they do, because the not-for-profit structure means that they're going to reinvest profits to help the members and to the community. So just know that that money is going back in for a positive situation. All right. It is an A-rated carrier as well. So the A&M Best Financial Strength rating for the 21st consecutive year. So year after year, they're hitting that great rating. And that's something you definitely want to look into when you are setting up a college plan, or when you even setting up just for life insurance and retirement. You want to know that your investment is going to be strong and secure. One of the benefits is going to be a benefit of being a member. So when you purchase a life insurance certificate from Foresters, the insured person becomes a member. So they don't just say, oh, here's your stuff. No, they're going to provide you with scholarships, have the availability to maybe get a scholarship. They have a well-being benefits, community and volunteer opportunities, and also community grants. So this definitely comes in handy, just being a part of that family, because they're putting the families first. And this is the scholarships with the membership. So they've been helping the families reach their goals of higher education year after year. And they're competitive. They have the competitive scholarship, and then also the orphan scholarship. So something were to happen to you prior, to you even getting to this point, your child may be able to receive the orphan scholarship or even the competitive scholarship. This is my favorite benefit as far as like with the membership. It's going to be the Law Shore. It's a complimentary and easy to use online document preparation service, and members can create customized wills, power of attorney, and healthcare directives. This is one of the areas where we fall in the most, as far as not really just taking care of it, just being negligent. So they provide you with this to customize a will, power of attorneys, or healthcare directive. So you can't say, oh, I don't have a will, or I don't know who's going to be the person that takes care of me if something was to happen. So this is very, very, very important, and it's huge just to be able to have access to the Law Shore. All right. You guys, this is pretty much all that I have for you guys today. I pretty much went over a lot with you guys. Really, the next step is, if you have any questions, just reach out to me, or you can do that by scheduling an appointment, or just leaving sending me an email at info@livingstonfinancialagency.com. I'm able to get back with you that way as well. But I thank you so much. This is all that I have for you guys. You guys have a great week, and I'll see you guys next Tuesday.